Welcome back. You're watching the CNBC TV 18 Budget Brainstorm. We're coming to you live from the Bombay Stock Exchange. Gentlemen, let me talk to you about what is going to be critical as far as trying to boost private investment is concerned and get the capex cycle moving. Interest rates. The government's big bet is that post-demonetization, there is enough with banks to be able to bring down interest rates, and the transmission should be faster and much more effective. Do you see that happening? We've got a credit policy coming up right after the budget on the 8th, but do you see a significant reduction in interest rates? We've already seen some fairly radical cuts in comparison to what we've seen over the past couple of years, but do you see a significant reduction in interest rates?
Well, the reason is very simple. The answer is yes, and the reason is simple to see. We talk to most banks and most lenders at this point of time. The credit growth is in the anemic still region of maybe 3 to 5% to 15%, depending on which sector we're talking to. And secondly, the amount of cash that has come in, despite the fact that after releasing the limits, some amount of cash will go out, but still net there is amount of extra amount of money with the banking system. So it has to be deployed, otherwise it's a negative carry. So I do see, because of this simple arithmetic of how P&L will work out, rates will come down. In fact, you must notice that interest rates came down more sharply after demonetization than the fact that RBI was putting pressure on the bank for close to a year and a half to reduce interest rate. It wasn't happening. It happened so suddenly. So I think market forces will take its role, and interest rates should come down. Of course, you might put some caveats about what happens to US and all that, but without complicating ourselves too much, I think the stage is set for that.
So for a lower interest rate trajectory. But just since we are talking about banks and we're talking about deposits as well, do you believe that we are likely to see bank recapitalization no longer being such a big issue as far as the government is concerned and government budget is concerned, because the banks are flushed with deposits at this point in time?
No. These are two separate things altogether, because when we say banking system, or largely the state-owned banking system needs funding, they're meaning more equity. And that need for equity has not gone away, because most banks are in the tier 1 of 6 to 8%, which is just on the edge. So that need's not going to go away, because this money has come in the form of liabilities to customers. But having said that, do we see that the government is going to give a big amount of check to the banking system? We doubt it, because there's already so much of pressures that's going to come on the budget making for making it available for the poor, for job creation, and for offsetting this demonetization. I wonder whether, apart from Indradhanush, probably government will stick to Indradhanush plan, but I suspect not beyond that.
Okay, so not a big window of opportunity there as far as bank recapitalization is concerned. Interest rates, what are you factoring in for the year ahead?
As Vaidya mentioned about an unforeseen change in terms of the transmission of interest rate, which they could done earlier. It's already happened. See, there are two levels where interest rates are going to play a role. One is for the consumer to enable him to buy more. On that count, to increase the consumption, I would certainly expect that for durable areas, automobile areas, and housing, to boost the demand, interest rates should come down. Any further reduction in the immediate future, even by 200 basis points, is not going to be turning around the sentiments in terms of investment.
It won't?
It won't. Because an investor will look forward to the saleability of the capacity is creating. If I already have a surplus capacity, and if somebody were to tell me, take money for free, create a huge capacity, sorry, one won't do that, because you're buying a burden onto your shoulder.
Sure.
So the cyclicality has to be seen in terms of cycle number one is a boost of consumption, which is what I'm expecting. Even today, if somebody were to be taking a loan for buying a white good, he's even today paying double-digit interest rate. The EMI is camouflage in EMI.
Sure.
If it were to be brought to a global level of maybe a 6 to 7%, not practical in the immediate future, but at least late single-digit numbers, I'm sure many more will buy based on the EMI, with which the capacities which are there will get utilized. Then having a reduction in capex interest rates will have a benefit for the country. So that's my assumption.
Mr. Revankar?
Interest rate will definitely come down, maybe 30-40 basis point over the maybe next 1 year. As Uni rightly said it, beyond a certain point, I don't think it will really increase the consumption, because the middle class people who save a little they will have little more savings to maybe purchase. But the real increase in demand should come from the rural area. That's where the huge population is there.
So what would your expectations be to try and drive consumption specifically in the rural economy?
No, basically the rural economy is dependent on the agri and agri-produce, agri-related industries. Right now they are little constrained by the demonetization impact, and they are not able to, they do not have a mechanism to really make a proper use of their money. Money is in the bank, and they are used to buying it from the cash. And all transaction in rural area is cash. Even a buying and selling of small produce or vehicles, everything is in cash.
So then, in that context of what you've just said, will a subvention on rural credit really be meaningful?
Subvention on rural credit for direct farming, yes. But beyond that, for consumption, it will not have any impact. Because consumption depends upon what you have in hand and what you feel like buying. So it is an instant, and probably it is more of a feeling good of buying something. I don't think it goes beyond that.
Okay, Undi?
We already had a good monsoon. So rural economy, irrespective of what is done by the government or the banking system, will have more produce available. Availability of people to buy it at the right time. Agencies who will ensure that minimum price is ensured to them, not the middlemen who will take it away from them, will ensure that there is money available. Money in the form of cash is something where remonetization will help. So money in terms of wealth is what is going to be available. So I am very hopeful in the current year you will certainly have a perk up done in the rural economy, and that will increase the consumption.
Consumption, ideas that the budget could take forward to try and boost consumption. We talked about corporate taxes, but the big hope is that perhaps the bias is going to be on personal income tax this time around, and the way that that could perhaps aid consumption.
Well, you know, actually consumption in India is doing pretty fine. Okay, demonetization in November cut it short quite sharply. December will bounce back, and we are practicing, practitioners. I can tell you that by January, things are just coming back fine. You can see restaurants are going full, and shops are going full, and salons are going full. Things are okay. Of course, who doesn't like some more consumption? Some more income tax in people's pockets? Great. But actually, if we got to use that money in a much more productive way, I'd say that if we can focus very seriously on rural roads.
Okay.
And,
we have the Pradhan Mantri Gram Sadak Yojana, and the allocation was up there.
Last year was 29,000 crore. I'd say that when we talk of investments, if the government itself can go and do the investments, put out the roads, and that money will percolate in the form of cash back to the contractors, back to the consumption, back to the consumers at large, and even the rural economy. I'd say particularly rural economy needs a lift, but lift it needs in the form of investments which will convert to cash and become consumption. Because just plain dumping cash in their hand through any means, whether through DBT or any other means, is a sure short way of increasing inflation, and we've seen the impact of it, of what happened last time.
That is right, and we have seen the impact of inflation. But only just to take Vaidya's point forward there on rural asset creation or rural infrastructure, and if I were to just take a look at the outlay of FY17, rural plus urban plus the NHAI, at least as far as road capex is concerned, it stood at 1.33 lakh crore rupees. It was up by about 47%. Pradhan Mantri Gram Sadak Yojana, as Vaidya pointed out, is just one aspect of that. But spending on rural infrastructure, could that be the big theme, the big idea that the government ought to focus on?
I think it is going to be a major idea. Last year they announced all this, but in real level, they have not been able to spend that money, not even able to initiate. Unless otherwise Panchayati Raj is really and properly implemented, all this will remain on paper. You need to have the local self-governance creating the sadaks and the roads in the villages. The NHI can't be making, they can make the big road through the center. What Vaidya has mentioned is about the internal roads for the movement of goods in the villages. So that has got to be money transfer, which is tried in a couple of states. I'm not naming any one of them. One state has done wonderfully well. Why should I not? The state where I come from, Kerala. So the rural roads, if you see that virtually 95% of the roads are tarred and concretized right now. That's because the state has transferred. They broke off this planning commission or planning board, giving it to the district headquarters, given to the villages. But more importantly, one more point let me add on. If you really want to have the infrastructure and the farming community to be having surplus money, you need to have a cold chain created in the country. Which is mentioned sometime back in 2 budgets.
It's been mentioned many times.
But nobody has taken an initiative for it. Harvesting happens in exactly 1 month for virtually every commodity. Human pellet is for 365 days. And poor farmers, because surplus and abundance in 1 month, he doesn't get the right money. If we create rural cold storages, then refrigerated vehicle transportation, and outside the cities, storage hubs, and then transfer it, you will be able to get the farmer a much better revenue for the produce that he's making. And I believe time has come for us to be looking at that as a very serious issue. We have spoken to the government. I presume the government will take an initiative in the right way in the current budget.
Well, we certainly do hope so, because as you rightly pointed out, we've been talking about this for very long. Mr. Revankar, specifically as far as the sectors that you deal with are concerned, what is it that you would like to see the finance minister do?
Yes, infrastructure is the one thing which we, not only the rural, even the bigger projects, there are a lot of delays. Delays in execution, implementation, because multiple ministries involved in, there should be a single window. They have to think of, because all the clearance they should be completing, then they should be awarding the projects. Then only we can see the real-term progress in any infrastructure activity. India's infrastructure is one of the weakest, because the logistic cost as per production on the cost of the product is around 13%, 13 to 14%, which is in developed countries around 8%. So it's a big margin for us to reduce the cost of goods and to export. And none of the production place or the industries are very conveniently located for export. Like if you look at China, entire production places or production houses are in the west coast, which can go into the
that's the big idea that the Niti Aayog has put forward, and they're hoping that in this budget it will be taken forward. Special coastal zones is what Dr. Arvind Panagaria has put forward to the government and the finance minister, specifically to attempt not just to address the infrastructure deficit and deal with exports, but also from a job creation point of view. But gentlemen, I want to address one of the issues that we haven't talked about so far, and that's the GST. Whether it comes on the 1st of July, the 1st of August, or the 1st of September, we don't know just yet. The hope is it will be the 1st of July. So in that context, indirect taxes, this is really going to be a non-event budget, isn't it?
I definitely think so. I think if anything, probably service tax will probably go up a little bit, aligned with the GST that's yet to come. But I think the really good news is that from subsequent years, I think a good portion of the budget will be automatically taken care of because of indirect taxes, and probably they'll have to deal only with the personal taxes. But it's largely done and variables out of the way.
Are you factoring in a 1st of July GST rollout?
I think so. I'm very hopeful for 1st of July rollout.
How prepared is industry for a 1st of July rollout? We did a poll yesterday, a CEO poll, and surprisingly a majority in that poll said that they were not adequately prepared for the GST rollout, and of course we had asked if they were ready by 1st of April. So now there's a little bit of a grace period. 1st of July, feeling prepared for the GST rollout?
Larger industries of the country are very well prepared for. Smaller are also prepared, because the larger ones are already registered in almost every state of the country. They have an edifice available. Smaller ones operate only in one city in the state, so they are. The medium-sized industry, which is possibly operating in 4 or 5 states or 10, 11 states, are the ones who are in trouble. But I don't think there is high level of unpreparedness. CEOs normally like to play it very safe. That's when maybe survey and poll, they'll want to give a lower marking for it. My opinion is we had enough and more time to prepare.
Yes.
The government is yet to be prepared, in my understanding, because what they need to be doing with the infrastructure to ensure that we are online on that as quick as possible. Otherwise, the notification will come on the 1st of July, but there'll be a concurrent system running with the current one and the new one, and that's okay. That's naturally in any transition, you'll have to do that. But can we quickly cross the entire issues with 31st of March 2018, where only one single GST prevalence happens in the country, is a real question. So I'm very hopeful 1st of July is the transition, the starting date, and I presume maximum 1 year for the other earlier system to be closed.
Okay, so industry prepared for a GST rollout come the 1st of July. On that note, we'll take a break, but when we return, we'll also talk taxes with Dinesh Kanabar of Dhruva Advisors. He joins us as well. Stay on with us. You're watching the Budget Brainstorm here live from the Bombay Stock Exchange. We're back in a moment.